Hello, and welcome to another edition of the Symmetry Spotlight, where I break down financial topics and common investment questions with the goal of helping you make sense of the world of finance. This month's topic is life insurance. Most of us have it, but have you ever wondered if you actually have enough? Today, I'm going to walk you through a simple way to determine how much life insurance you may need. So how much life insurance you need, obviously that's going to vary from person to person. Depending on what stage of life you're in and what your insurable risks are. Quite often we'll come across folks who have life insurance, but they're underinsured, meaning they don't have enough insurance to cover the basic risks and their family would be in trouble financially if they pass away. But we also come across people that are overinsured, meaning they have more coverage than they need. And it doesn't sound like an issue, but the problem is those dollars that they're spending on insurance premiums could be put towards some of their other financial goals instead. Figuring out exactly how much life insurance you need is best done by having a conversation with a professional like me who specializes in doing this for a living. We have a defined process we take clients through to hone in on exactly what would be the right amount of coverage, and from there, what type of insurance policy makes the most sense for them. In the meantime, I've got a trick you can use just to get kind of a general idea of how much you may need. It's as simple as starting with the word life, L-I-F-E. The L in life stands for liabilities, which is another way of describing debt. Ideally, you would want to build a dollar amount into your life insurance policy to pay off any outstanding debt that you have. Mortgage, car loans, student loans, credit cards, anything you still owe on, add it up. The idea is if you passed away early, you would want to have enough money in your life insurance policy to pay off all of your family's liabilities so that they're debt-free and they don't have to worry about those monthly debt payments. So for this example, let's say we added up all of our debt and that totaled to $250,000. The I in life stands for income replacement. So imagine you pass away early and now your family doesn't have your income coming in anymore. Would they be able to cover all of their monthly expenses? Now remember, they would be debt-free because you made sure you had enough money in your life insurance policy to pay off all the debt. But would the surviving spouse's income still be enough to cover all the normal monthly living expenses? Groceries, gas in the car, things like that are still there. If the answer is no, so the surviving spouse's income is not enough to cover the monthly expenses, then you want to add income replacement into your life insurance policy. For example, let's say the surviving spouse brought home $4,000 per month and the family's monthly living expenses were $6,000 per month. So they're short $2,000 per month. You'll need to decide how long do you want to provide that surviving spouse with that additional $2,000 per month of income replacement. For our example, let's say we want to provide the surviving spouse with that $2,000 per month for 5 years. So that's $24,000 per year for 5 years. That's $120,000 that you would want to build into your insurance policy to cover that income replacement for the surviving spouse. You want to make sure that your family is still able to cover their monthly expenses in your absence without having to make any significant lifestyle changes. And whether you decide to just cover the gap, like in my example, or you want to completely replace your net monthly income, it's totally up to you. But in most cases, with two working spouses, there needs to be some form of income replacement built into a life insurance policy. The F in life stands for funeral. Funerals are not cheap, and most funeral homes are going to want some amount of money up front to take care of this. So ideally, as a family, you would have already established an emergency fund to cover the funeral. But if not, your life insurance policy will need to do so. Or your life insurance policy would need to replenish the family emergency fund if you have to use that money to go towards the funeral costs. Now, some people want a very basic funeral or they want to be cremated, while others might want a parade down Main Street in their name. Whatever the funeral might look like for you, make sure you have money built into your life insurance policy to pay for it, or again, to replenish the family's emergency fund if they need to tap into that to cover the funeral. So for our example, we're gonna assume that the dollar amount needed to cover those funeral costs is gonna be $25,000. Finally, we have the E in life. That stands for education fund. For some folks with younger children, it's important to them to make sure that their kids' higher education is covered if they pass away prematurely. If that person is you, then you can build that into your insurance policy. Now, planning for college is complex, which is a whole nother conversation that I can help with. But let's say for the purpose of this example, we determine that in today's dollars, we need to have $100,000 set aside per child, and we've got 2 kids. So we have a total of $200,000 that we are going to build into this life insurance policy to cover those future education costs. So totaling everything up, we had $250,000 in liabilities that need to be paid off. We had $120,000 in income replacement, $25,000 for funeral, and $200,000 set aside for future education costs. So grand total of $595,000 in life insurance coverage needed for this example using that basic needs analysis approach. Now again, using the acronym LIFE, this is a way to ballpark your policy amount. It's not meant to replace a full-blown life insurance needs analysis. You would want to sit down with me and go through the whole process to really hone in on the exact amount of coverage. And step 2, figure out what type of life insurance would make sense for you, which is a whole nother conversation and probably a really good topic for a future video. This approach, this is what we call the paper napkin planning approach, just to get kind of a preliminary idea on if you have enough coverage currently, or if your needs have changed and you need to sit down and reconsider getting some more coverage. If you have any questions on this information, or if you want to sit down and discuss your life insurance needs in more detail, please don't hesitate to reach out to me. Otherwise, thank you for watching, and I look forward to talking with you again soon.